Question of the day.
So, Austin, what is this question? This is from Mary. I won't say her last name.
Yeah, she said, "Hi, Chris. I watched part 3 of your podcast on Roth conversions, and I just have a question. Not sure if I missed it, but there are rules on Roth IRA distributions the same if you've inherited a Roth?"
Right. So she had a great question because we talked a lot in part 3. There is this 5-year rule that I said I think was more complicated than reading the internal tax code or something like that. It's a headache waiting to happen.
Mm-hmm.
But we addressed it because you can't talk about Roth conversions without talking about how and when you can take out distributions. So we covered that topic. But what we didn't talk about is what happens if you pass away and one of your beneficiaries gets the Roth. So I did want to address it really fast. It's on the screen. I'm not going to go through the details of it. But basically, there are 3 kind of Roth beneficiaries, right?
Mm-hmm.
The first one is your spouse, okay? So if you have a Roth and you die, your spouse most likely is going to get that. She can just take, and Andrew, you can just take that
it as your
Roth
own.
and just move it
Mhm.
into your own, right? But there's eligible beneficiaries. There's not a lot of eligible beneficiaries. Their rules are a little bit different. Minor child is an eligible beneficiary. If you're chronically ill and you inherit a Roth, if you're permanently disabled and you inherit a Roth, or if the person that's receiving the Roth as a beneficiary is more than 10 years younger than you as the original account holder. These are eligible beneficiaries. Basically, what you're going to do is take that money and you have to take distributions over your lifetime as the IRS says your lifetime is. But most of the time, say you're a child, right? So you pass this Roth on to your children. You're not an eligible beneficiary. You're a designated beneficiary.
Right.
And what we know about Roths and all IRAs is that once you get these, you basically have to empty out the account over 10 years. So there's a lot of rules to it. Here's the point. When you die, you're going to give your Roth to somebody. The rules are basically the same as if you were still alive. Those rules carry over. And the taxation is on this next screen here. The same rules apply for taxation that we also discussed in part 3 of the Roth. So for benefit of Mary, that question was a good one. When you inherit a Roth, you basically are taking over the same rules that we discussed in part 3 of Roth conversions. You have to essentially, most of the time, when you get a Roth, you're going to have to cash it out in 10 years. But that Roth, this was our point, when you cash out a Roth, is it taxable?
Not taxable.
It's not taxable. You can cash it out right away, but you really want to keep that in there as long as possible because it's growing tax-free.
Right.
So that was a good question.
Investment advisory services provided by Seer Financial Inc., SEC registered investment advisor. All content on this podcast is for information purposes only and should not be considered investment, legal, or tax advice. Material presented is believed to be from reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness.